but you could argue it's a very long fuse and it's been lit. How long before it hits the firecracker? Don't know, but it's not good for the dollar. It's not good at all for the dollar long term, because you now have legitimate alternatives, if this grows, that have not been around for the better part of over 50 years. And I think it will have great adoption as a result of it being free from the ability of the Western sanctions. And that's really, I think, what the key is here. Not only will it be faster settlement and less costly, instead of having these currencies all have to convert into dollars through commercial banks to the central banks and back into the other currencies. It's costly, it's time consuming, but more relevant, it also will greatly curtail the ability of these countries to sanction and weaponize the system the way that they have.
The recent rally in gold and silver has captured the attention of market analysts worldwide. Yet, according to Andy Schectman, CEO of Miles Franklin, the U.S. retail sector has largely remained on the sidelines. The American public has not significantly participated in the current rally, Schectman said, noting that interest levels are as low as they have been in the past few years. This tepid response contrasts sharply with the actions of central banks, particularly in emerging markets. Countries like India have been aggressively accumulating gold and silver, reflecting a robust institutional interest. Schectman pointed out that India, for instance, has purchased 1.5 times the amount of gold it did in all of last year within the first 4 months of this year alone. This surge in central bank buying underscores a strategic move to repatriate and hold more precious metals domestically. Despite this, the dynamics of price discovery remain complex. Schectman highlighted the significant role of commercial banks in shorting precious metals, which has had a notable impact on market prices. Price discovery will never really happen until these banks stop their massive short positions. He explained the ability of these institutions to maintain such positions often results in suppressed prices, hindering the market's natural upward trajectory. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hit the like button if you like our recaps, and check our description for more info. Enjoy the episode.
Hope that Bill's right and that we see it start to move up again in its next leg. But this is one of those deals where, if you haven't learned patience yet in this industry, you never will. And it teaches you to try and find optimism wherever you can. But indeed, I think, look, the global demand for silver is not stopping. It's just hard to see it and notice it here in the United States, where the public really has not participated as much as one would think in the rally. In fact, you could argue that it is as off the radar screen now as it's been in the last 3-4 years to the public. At the same time, the central banks like India are massively accumulating it. And the common theme with all of the accumulation we see by these central banks is repatriation. Now, I know more of that is applicable in gold, where India bought 1.5 times the amount of gold they did all of last year in the first 4 months and brought it all home. At the same time, brought home 100 metric tons they've held at the Bank of England since 1991, I want to say. But I think the same thing is true with silver. It's just assumed. And when you look at all the silver that India has bought, well over 600 million ounces in the last couple of years. And now the increase in the amount of silver, I wrote this down, that the amount of silver that they've been buying from the United Arab Emirates is up 654 times in the past year. That they bought $2.2 million worth between January and April of 2023. Yet over the same time period here in 2024, 1.44 billion, a 654-fold increase. So you're seeing a drive by these very large, sophisticated money centers in the central banks to accumulate commodities like silver, like gold, to repatriate them, to do it in ways that really aren't being reported too much in the Western media. And I think it's interesting. I look at it again as a very big contrarian indicator that the big sophisticated money is accumulating. And at the same time, the public here isn't. And again, we're seeing large deliveries off the Shanghai Gold Exchange and off the LBMA. and off the COMEX. So, I guess we'll have to see. But yeah, I think the trend of higher silver, just based upon the central bank interest in purchasing, one would think ultimately goes much higher, regardless of what short-term fundamentals look like, regardless of the pullback that we've seen. As far as I'm concerned, nothing's changed in a world that seems to be getting crazier by the day. And again, no evidence to support this, but maybe they realize that the ability to rinse, wash, and repeat, as they've done for so long, is getting old and long in the tooth. And one of these days, they're going to put so much pressure on the managed money that they too capitulate, go short, sell their longs. And then when the commercial banks have all of those positions in hand, their long positions covered the majority of their shorts, they won't short the rising market. There will no be rinse, wash, and repeat, and it will run to the upside. One would think in an environment as crazy as this is globally, geopolitically, that it would be very dangerous to have these naked short positions the way that they do. And but yes, to your point, typically seeing a position where the commercial banks are that short is usually not a good sign for what silver's going to do in the near term.
In today's market recaps, a silver price analysis, silver continues battling higher within descending channel. Silver is recovering within a falling channel. It has met tough resistance at the level of the 50 and 100 period SMAs on the 4-hour chart. There are bullish signs, but a breakout of the channel would be a prerequisite for a more confident stance. Silver continues recovering within a descending channel. The precious metal found support at the June 26th and 13 lows around 26.88. Its first attempt to break above the cluster of moving averages in the mid-2940 failed, but after its pullback on July 1st, it has started creeping higher again. It is now debatable whether silver is still in a bearish short-term trend, which means there is no longer a downside bias. However, it is in a falling channel, which does add a bearish tone to the charts. If silver continues recovering and breaks on a closing basis above the 50 and 100 SMAs, however, it would indicate a continuation higher to the upper channel line at around 29.90s. This would be a critical crossroads for the pair. It is also a major resistance level at the top of a 4-year consolidation zone. A decisive break above would indicate the start of a new short-term uptrend. Silver temporarily broke out of the top of the falling channel on June 20th, and although it quickly fell back, the fact it breached the integrity of the channel, albeit temporarily, indicates the upper channel line has been weakened and is more likely to give way again. This also adds a slightly bullish note to the charts. Now we'll show you the best clips of the latest interview. But first, smash the subscribe button, hit the like button if you like our recaps, and check our description for more info. Enjoy the episode.
You're the largest oil producer in the world. Sign on as a full participant is a very big deal. Project mBridge does not utilize dollars. Dollars do not work on Project mBridge. And so what it does is it eliminates the ability, first and foremost, for the United States and the West to impose sanctions, number one. And if you read the unit information, they talk about it being redeemable in gold for these countries. It is backed by something substantial. And when you realize that gold has outperformed the Treasury, the 10-year Treasury over the last 25 years by almost double with no counterparty liability, it incentivizes countries. Part of the petrodollar deal was to sell not only in dollars, but to take any of the excess reserves and put them into U.S. Treasuries, which has been the key to, bolstering the bond market, keeping interest rates low and supporting our dollar and our system. If you all of a sudden have countries that not only aren't using the dollar to settle in, because the whole concept of the unit and the mBridge is that these countries can remain autonomous, have their own monetary policy, and trade in their local currencies, but settle in a common settlement currency that is backed by 40% gold and 60% in the currencies that are in the BRICS plus countries. So it incentivizes the stockpiling of gold, which we've seen. The BIS is part of the Project mBridge. They're the ones who reclassified gold. All of these things seem to be coming together. What it really does is, for the first time in 50 years, gives a real competitor to the system. and reason to not stockpile treasuries and reason to not stockpile dollars. In other words, the settlement or the transaction would be done in local currencies. The settlement is done in a common settlement currency. Both chip away at the hegemony of the dollar. And I think it remonetizes gold throughout the world in terms of its value and puts a question mark on the treasury. So yeah, it is ultimately something that would have a negative impact, one would think, ultimately, on the dollar. But again, when you see Saudi Arabia become a full participant in this program, I think it signals that the end of a system that you could argue is past its expiration, and the beginning of a new system, one that will be all about transparency, all about, blockchain, and commodities. I mean, this fits right into what Zoltan Pozsar says. So again, people who expect instant gratification and immediate results will dismiss this and look past it. And in fact, we've seen that. But to me, it's just more and more and more of the little by little by little by little chipping away. And I would argue this alone, in and of itself, ends the dollar hegemony, not the supremacy, which still represents 60% or more of all of the reserves. And, the supremacy is still there. But yeah, you could argue the hegemony is over. And with each passing day and with each, out of this meeting in Novigrad last week, they talked about 59 countries want to join. And, how big will this union be? And will all of them start trading on mBridge? And will all of them start accepting and trading the unit? I guess we'll see. There's a special meeting in September to discuss the unit in China. And if it all goes well, they'll roll it out in October. These are all ifs, but you can see that we are hedging and moving and edging in this direction. So that will take time, to your point, but you could argue it's a very long fuse and it's been lit. How long before it hits the firecracker? Don't know, but it's not good for the dollar. It's not good at all for the dollar long term, because you now have legitimate alternatives, if this grows, that have not been around for the better part of over 50 years. And I think it will have great adoption as a result of it being free from the ability of the Western sanctions. And that's really, I think, what the key is here. Not only will it be faster settlement and less costly, instead of having these currencies all have to convert into dollars through commercial banks to the central banks and back into the other currencies. It's costly, it's time consuming, but more relevant, it also will greatly curtail the ability of these countries to sanction and weaponize the system the way that they have. So that in and of itself makes it compelling to a lot of countries, and ultimately to the detriment, if you will, of the status quo. So I guess we'll see. Only time will tell. But not good for the status quo. Not good for recency bias, and ultimately could be the first chapter of a new system.
What do you think of Andy Schectman's take? Will the East versus West war end up in a massive gold and silver price squeeze? Will the dollar collapse in 2025 as the BRICS nations take over? Share your honest opinion in the comments section down below. Send a super thanks if you find our recaps valuable, and make sure you see this video right here because it's a perfect fit for you. I see you on the other side.